Once steadfast economic allies, the United States, Germany, and Canada are now on a collision course. Washington's aggressive tariffs on steel, aluminum, and cars have sparked a fierce backlash from Germany, and they're not standing alone. In a surprising twist, Germany and Canada are joining forces against U.S. trade policies, igniting a crisis that threatens to upend the global economy. Think this is just another diplomatic spat? Think again. This trade war could drive up prices on everything from cars to everyday goods, lead to massive job losses, and shift the balance of global trade power. The real question is, who will blink first, and what does this mean for the future of U.S. dominance? Let's dive in. For decades, the relationship between Germany and the United States was one of mutual benefit and economic cooperation. Germany, as the European Union's largest economy, has long relied on the U.S. market for its world-renowned exports, particularly in the automobile and industrial sectors. Meanwhile, American businesses have found Germany to be a key gateway into the broader European market. This alliance seemed unbreakable. Until now. The political landscape shifted dramatically under President Donald Trump's administration, which pursued an aggressive America First trade policy in an effort to revive domestic manufacturing and reduce trade deficits. The Trump administration imposed a 25% tariff on imported steel and aluminum, a move that sent shockwaves through global markets. While these tariffs were initially framed as a national security measure aimed at curbing China's economic influence, the real collateral damage was felt by traditional U.S. allies, including Germany and Canada. But the situation escalated further when the Trump administration threatened an additional 25% tariff on automobiles, specifically targeting German car manufacturers such as BMW, Mercedes-Benz, and Volkswagen. Unlike previous trade disputes that were often resolved through quiet diplomacy, this time Germany decided it would not sit idly by. In a move that stunned Washington, Berlin announced that it was considering retaliatory tariffs on American goods, including agricultural exports, whiskey, and high-tech equipment. For the first time in modern history, one of America's strongest European allies was preparing to retaliate directly against U.S. economic aggression. But this was just the beginning. What started as a tariff dispute over steel and aluminum had spiraled into a full-blown trade confrontation, and at the center of it all was Germany's most valuable industry, automobiles. Germany's biggest fear has come true. Its entire automobile industry is under attack. If there is one industry that defines Germany's global economic power, it is automobiles. For decades, German car manufacturers have set the gold standard for quality, engineering, and innovation. Companies like BMW, Mercedes-Benz, and Volkswagen do not just represent German pride, they are responsible for millions of jobs, both directly and through vast supply chains that stretch across Europe. Now, with the looming threat of a 25% tariff on all German-made vehicles entering the U.S., the industry is in crisis mode. This proposed tariff is more than just a tax. It is a potential death sentence for German car exports to the United States, which account for over $100 billion annually. If implemented, the new tariffs would add thousands of dollars to the price of every German vehicle, making them significantly more expensive for American consumers. The economic implications are staggering. German automakers produce over 800,000 vehicles annually for export to the United States. If demand drops due to a rise in prices, factories in Bavaria, Baden-Württemberg, and Saxony could face massive layoffs. The German auto industry is not just about manufacturing. It supports engineering, research, design, and logistics jobs across the country. A sharp decline in exports would send shockwaves through the entire German economy, leading to job losses in related industries such as auto parts, steel, and transportation. But it is not just Germany that stands to lose. The United States itself relies heavily on German auto investments. Companies like BMW and Mercedes-Benz operate assembly plants in South Carolina and Alabama, employing tens of thousands of American workers. If German automakers scale back production due to the tariffs, those jobs could also be at risk. The irony? Trump's tariffs, designed to protect American industry, could end up hurting American workers just as much as their German counterparts. The stakes could not be higher. If German car exports collapse, Germany's entire economic structure could be shaken. But just as Berlin was preparing its response, it found an unexpected ally, one that had its own reasons for standing up to Trump's trade policies. And as if that wasn't bad enough, the problem goes even deeper. Germany wasn't the only country blindsided by Trump's tariffs. Canada, one of America's closest trade partners, was also caught in the crossfire. The United States and Canada share one of the largest trade relationships in the world, with bilateral trade exceeding $800 billion annually. However, Canada's steel and aluminum industries were hit hard by the tariffs, forcing Prime Minister Justin Trudeau to take a stand. Faced with similar economic threats, Germany and Canada began exploring a joint strategy to counter U.S. trade policies. Faced with similar economic threats, Germany and Canada began exploring a joint strategy to counter U.S. trade policies. On the surface, the two nations have little in common. Germany is a European powerhouse, while Canada's economy is deeply tied to the North American market. But they share one critical problem. The United States was disrupting their biggest industries, and they needed a coordinated response. By aligning their retaliatory measures, Germany and Canada increased pressure on Washington. Instead of dealing with one disgruntled trade partner, the U.S. was now facing a united front of economic resistance. This cooperation extended beyond just tariffs. Germany and Canada also began strengthening trade ties with each other, reinforcing their long-standing economic partnership under the Comprehensive Economic and Trade Agreement. This new alliance had a clear message. If the U.S. was going to play hardball, its allies were ready to push back. But not everyone was on board with Germany's aggressive stance. In fact, some of its closest allies in the European Union were caught completely off guard. Germany's move stunned Brussels. Traditionally, all EU member states follow a unified trade policy, with the European Commission handling trade disputes on behalf of the entire bloc. By acting alone, Germany risked undermining the EU's authority, raising concerns among other member states. France, Italy, and Spain viewed Germany's independent approach with suspicion, fearing that Berlin was prioritizing its own economic survival over the interests of the entire bloc. Some European diplomats even warned that Germany's actions could weaken the EU's negotiating power, as it set a precedent for other member states to pursue their own bilateral trade agreements. Despite the criticism, Germany defended its decision, arguing that the stakes were too high to wait for a slow-moving EU response. The reality was clear. If Germany's auto industry collapsed, the entire European economy would feel the impact. Germany had drawn a line in the sand, and Canada had joined the fight. The moment the United States imposed its tariffs on German and Canadian goods, retaliation became inevitable. Both Germany and Canada saw these economic moves as an attack on their industries, national economies, and international standing. Rather than waiting for prolonged negotiations or uncertain diplomatic resolutions, they struck back with forceful countermeasures. Germany responded swiftly by imposing hefty tariffs on American whiskey, agricultural products, and industrial goods. American whiskey, particularly bourbon, which had seen rising popularity in the European market, was now facing a 25% tariff. This move was not just symbolic but strategic, as it directly targeted industries in key U.S. states, particularly Kentucky, where bourbon production thrives. This decision put immense pressure on American distillers, many of whom relied on Germany and the broader European Union as one of their largest export markets. This move was not just symbolic but strategic, as it directly targeted industries in key U.S. states, particularly Kentucky, where bourbon production thrives. This decision put immense pressure on American distillers, many of whom relied on Germany and the broader European Union as one of their largest export markets. Canada, equally outraged, followed suit by slapping tariffs on a broad range of American products. The Canadian government imposed taxes on key agricultural products such as dairy, beef, and pork, directly affecting American farmers who had long relied on Canada as a primary export market. These retaliatory measures sent shockwaves through the American farming sector, which was already struggling with rising costs and shifting trade policies under the Trump administration. In addition, Canada targeted U.S. industrial goods, placing tariffs on machinery and automobile parts, a move designed to increase production costs for American manufacturers. The immediate fallout from these retaliatory measures crossed the United States. American businesses, particularly those in the agricultural and manufacturing sectors, quickly realized the devastating impact of these tariffs. Exporters who had relied on Canada and Germany as major buyers now faced rising costs and plummeting demand. Business leaders and trade associations flooded the White House with concerns, urging the administration to reconsider its aggressive stance. Economic experts warned that prolonged trade tensions could lead to job losses and higher consumer prices across various industries. The pressure was mounting, but Trump remained defiant, insisting that these measures were necessary to protect American interests. And then came the move that no one saw coming. Canada's boldest move yet. As tensions escalated, Canada took an unprecedented step that sent shockwaves through the global auto industry. In a move that surprised analysts and industry insiders alike, Canada announced a 100% tariff on U.S. electric vehicles. In a move that surprised analysts and industry insiders alike, Canada announced a 100% tariff on U.S. electric vehicles. This decision was particularly devastating for Tesla, which had been expanding aggressively in the Canadian market. Tesla had positioned itself as a leader in the electric vehicle revolution, and Canada was a crucial market due to its growing demand for sustainable transportation. The imposition of a 100% tariff effectively doubled the price of Tesla vehicles in Canada, making them unaffordable for many consumers. This sent Tesla's stock tumbling as investors panicked over the potential loss of a key international market. The shock to the company was immediate, and even CEO Elon Musk was forced to address the issue publicly, calling the move short-sighted and damaging to progress in the fight against climate change. But for Canada, this was about more than just one company. The country had been seeking to bolster its own domestic electric vehicle industry, and this tariff created an opportunity for Canadian and European manufacturers to step in. Companies like Volkswagen, which had been ramping up production of electric vehicles, saw this as a golden opportunity to capture the Canadian market. The move also sent a clear message to Washington. Canada would not hesitate to defend its economic interests, even if it meant targeting one of America's most iconic and innovative companies. The implications of this decision extended beyond Tesla. Other American automakers worried that similar measures could be imposed on their exports, creating further instability in an already volatile market. Industry experts speculated that if Canada succeeded in sustaining this tariff, other nations could follow suit, further isolating the United States in the electric vehicle industry. The White House, caught off guard by the severity of the response, scrambled to assess the potential consequences. But the damage was already done. Trump may be fighting an international war, but his biggest battle is at home. The economic consequences of Trump's trade war were beginning to hit home, and the backlash was growing louder. American farmers, automakers, and business leaders who had initially supported Trump's protectionist policies were now facing the harsh reality of economic retaliation. The very industries that Trump had vowed to protect were now bearing the brunt of the trade war. The economic consequences of Trump's trade war were beginning to hit home, and the backlash was growing louder. American farmers, automakers, and business leaders who had initially supported Trump's protectionist policies were now facing the harsh reality of economic retaliation. The very industries that Trump had vowed to protect were now bearing the brunt of the trade war. Farmers across the Midwest, a core base of Trump's political support, were some of the hardest hit. Reports showed that thousands of jobs were at risk due to declining exports. With Canada and Germany imposing tariffs on agricultural products, American farmers found themselves with surplus goods and nowhere to sell them. Prices for key commodities such as soybeans, corn, and pork plummeted, putting small and mid-sized farms in serious financial jeopardy. Farmers who had previously benefited from trade agreements with Canada and the European Union now faced an uncertain future. Meanwhile, the auto industry was also feeling the strain. With Canada targeting American automakers and industrial goods, manufacturing costs were rising, and companies were forced to make tough decisions about production and layoffs. Executives from major U.S. companies lobbied the White House, warning that if the tariffs continued, they would be forced to cut jobs and move production to other countries to remain competitive. The political landscape was shifting as well. Lawmakers from both parties, particularly those representing agricultural and industrial states, began voicing concerns over the administration's aggressive trade policies. And just when it seemed like things couldn't get any worse for the U.S., China enters the equation. Guess who's quietly winning this trade war? China. While Germany, Canada, and the United States engaged in an economic battle, China saw an opportunity. As the trade war escalated, China moved swiftly to strengthen its economic ties with both Germany and Canada, recognizing that both countries were looking for alternative markets. As the trade war escalated, China moved swiftly to strengthen its economic ties with both Germany and Canada, recognizing that both countries were looking for alternative markets. China ramped up negotiations with Germany, proposing new industrial and technology partnerships that would reduce reliance on U.S. imports. In Canada, China expanded its purchases of Canadian agricultural products, providing a lifeline to farmers who had lost access to the American market. This strategic move not only helped stabilize Germany and Canada, but also positioned China as a key player in the evolving global trade landscape. The implications of China's involvement were profound. With the U.S. isolating itself through protectionist policies, China was effectively filling the void, strengthening its economic influence across multiple continents. Analysts warned that if the U.S. continued down this path, it risked losing its position as the dominant global economic power. The trade war that had started as a battle between the United States, Germany, and Canada had now taken on a new dimension, with China emerging as the unexpected winner. As Germany, Canada, and China build a new trade order, the European Union faces its own internal dilemma: how to maintain unity when one of its strongest economies starts acting alone. The European Union was founded on the principle of economic and political unity, ensuring that its member states would negotiate trade agreements as a bloc rather than individually. However, Germany's proactive stance in forging direct trade ties with Canada has alarmed other European nations, particularly France and Italy, who fear that Germany is prioritizing its own economic interests over European solidarity. However, Germany's proactive stance in forging direct trade ties with Canada has alarmed other European nations, particularly France and Italy, who fear that Germany is prioritizing its own economic interests over European solidarity. France, historically one of the strongest proponents of European integration, has expressed concerns that Germany's unilateral approach could weaken the European Union's negotiating power. French officials argue that when Germany bypasses the established decision-making process, it undermines the European Union's credibility on the global stage. Italy, which has faced economic instability in recent years, is also wary of Germany's move. Italian leaders worry that if the European Union fractures into individual trade negotiations, smaller economies like Italy could struggle to secure favorable deals. At the heart of this struggle is a fundamental question. Should the European Union allow its strongest economies to take independent action when the collective approach is slow and inefficient? Germany's leaders insist that their goal is not to undermine the European Union but to protect their industries from the economic fallout of U.S. tariffs. However, this justification has not reassured all European partners. Some analysts predict that if Germany continues to act independently, other nations might follow suit, leading to a more fragmented European trade policy. While world leaders debate the future of globalization, the real impact of these trade wars is already being felt by everyday consumers. Trade disputes between nations might seem like abstract policy battles, but their effects trickle down to everyday consumers in ways that are impossible to ignore. One of the most immediate and tangible impacts of escalating tariffs is the increase in prices for goods and services. When governments impose tariffs on imports, businesses either absorb the added costs or pass them on to consumers. In most cases, consumers bear the burden, paying more for products ranging from cars to electronics to groceries. One of the most immediate and tangible impacts of escalating tariffs is the increase in prices for goods and services. When governments impose tariffs on imports, businesses either absorb the added costs or pass them on to consumers. In most cases, consumers bear the burden, paying more for products ranging from cars to electronics to groceries. Take, for example, the automobile industry. With the United States imposing tariffs on German cars and Germany retaliating with its own trade barriers, the cost of vehicles has surged. American consumers looking to purchase a BMW, Mercedes, or Volkswagen now face significantly higher prices. Similarly, Canadians and Europeans importing American vehicles and machinery are experiencing steep price hikes. These price increases extend beyond luxury goods. Even basic necessities like household appliances and construction materials have been affected by supply chain disruptions. Beyond rising costs, supply chain chaos is another consequence of the ongoing trade wars. Many industries operate on just-in-time manufacturing models, meaning that even minor disruptions can lead to major delays. When tariffs force companies to find new suppliers, logistical challenges arise, causing shortages and unpredictable price fluctuations. For instance, the increased cost of imported steel has impacted everything from infrastructure projects to consumer electronics. Additionally, job losses are a growing concern. As industries struggle to adjust to changing trade policies, some businesses have been forced to cut costs through layoffs. Factories that once relied on stable supply chains and predictable costs now face uncertainty, making long-term investment decisions difficult. The ripple effect is widespread. When businesses reduce production, suppliers suffer, and local economies feel the strain. While politicians debate economic strategies, the reality is clear. Consumers around the world are already paying the price. Whether it is through higher prices, delayed shipments, or job insecurity, the effects of economic nationalism and trade disputes are shaping the daily lives of millions. When businesses reduce production, suppliers suffer, and local economies feel the strain. While politicians debate economic strategies, the reality is clear. Consumers around the world are already paying the price. Whether it is through higher prices, delayed shipments, or job insecurity, the effects of economic nationalism and trade disputes are shaping the daily lives of millions. As these tensions continue to escalate, one question remains. Will global trade ever return to the way it was? Or is this the beginning of a new economic reality? For President Donald Trump, the trade war with Germany and Canada has become more than just an economic battle. It is a test of strength and political dominance. The United States imposed aggressive tariffs, expecting compliance or mild retaliation. Instead, Germany and Canada have responded with their own economic countermeasures, putting pressure on the U.S. economy and sparking domestic backlash. Now the White House faces a difficult dilemma: either double down on tariffs and risk further economic instability, or seek a resolution and risk appearing weak on the global stage. Backing down could be perceived as an admission of failure. Trump built his political brand on the promise of putting America first, protecting domestic industries, and renegotiating what he called unfair trade deals. Conceding to Germany and Canada's retaliation without extracting significant concessions could undermine his authority, especially with an election on the horizon. His supporters expect him to maintain a tough stance against economic rivals, and reversing course could be seen as a betrayal of those promises. However, the economic consequences of a prolonged trade war are mounting. U.S. businesses are struggling with higher costs, supply chains are being disrupted, and key industries such as agriculture and automobiles are feeling the sting of retaliatory tariffs. If the administration refuses to de-escalate, the financial toll could become a major liability, not just economically, but politically. American companies are already lobbying for relief, and influential trade groups are warning of long-term damage. U.S. businesses are struggling with higher costs, supply chains are being disrupted, and key industries such as agriculture and automobiles are feeling the sting of retaliatory tariffs. If the administration refuses to de-escalate, the financial toll could become a major liability, not just economically but politically. American companies are already lobbying for relief, and influential trade groups are warning of long-term damage. There is also the question of international credibility. The United States has traditionally been a leader in free trade, advocating for open markets and global economic cooperation. A prolonged conflict with long-standing allies could weaken its position in future trade negotiations, especially as China and the European Union seek to establish alternative economic alliances. If Germany and Canada successfully pivot away from the U.S. market, other countries may follow suit, reducing America's influence over global trade. The White House may try to frame any de-escalation as a victory rather than a concession. This could involve securing minor trade agreements or symbolic concessions from Germany and Canada that allow Trump to claim a win without actually changing much in substance. Alternatively, the administration could quietly delay or roll back tariffs without making a formal announcement, shifting the focus to other political issues to avoid appearing to retreat. The trade war was initially meant to pressure allies into making concessions, but it may have inadvertently pushed them toward independence. If this trend continues, America's leverage in future trade negotiations could be permanently weakened. Could this trade war explode into something bigger? Trade wars are rarely contained to just tariffs and counter-tariffs. The longer this economic conflict drags on, the greater the risk that it spirals into something much bigger, affecting global supply chains, financial markets, and even diplomatic relations. One of the worst-case scenarios is a global recession triggered by prolonged trade uncertainty. If Germany and Canada shift away from U.S. trade and other countries follow suit, American exports could decline significantly. Trade wars are rarely contained to just tariffs and counter-tariffs. The longer this economic conflict drags on, the greater the risk that it spirals into something much bigger, affecting global supply chains, financial markets, and even diplomatic relations. One of the worst-case scenarios is a global recession triggered by prolonged trade uncertainty. If Germany and Canada shift away from U.S. trade and other countries follow suit, American exports could decline significantly. This could lead to factory closures, job losses, and reduced consumer spending, ultimately slowing down the entire global economy. Another risk is that this economic dispute spills over into other geopolitical issues. Trade tensions often go hand in hand with diplomatic friction, and as alliances shift, so does global stability. If Germany and Canada align more closely with China or other economic powers, the United States could find itself increasingly isolated. Trade agreements may turn into broader strategic partnerships that reshape international relations beyond just commerce. If tariffs and trade barriers fail to resolve the conflict, countries may resort to more aggressive tactics such as sanctions, investment restrictions, or regulatory crackdowns on foreign companies. This could create an environment of prolonged hostility, making it even more difficult to repair relationships in the future. The ripple effects of this trade war extend beyond just the three countries involved. The European Union, Japan, and other major economies are watching closely, assessing their own positions. If they see Germany and Canada successfully counter U.S. tariffs, they may be emboldened to take similar measures, further fragmenting global trade networks. If no one backs down, this trade war could become a defining moment in modern economic history, reshaping the way nations interact for decades to come. So, who wins and who loses? At this point, it is no longer just a matter of tariffs. The trade war between the United States, Germany, and Canada has triggered a fundamental reevaluation of global trade relations. So, who wins and who loses? At this point, it is no longer just a matter of tariffs. The trade war between the United States, Germany, and Canada has triggered a fundamental reevaluation of global trade relations. The question is not just who will come out on top in this specific conflict, but whether this marks the beginning of a permanent shift away from U.S.-dominated trade. Germany and Canada may ultimately benefit by diversifying their economies and reducing their reliance on a single market. While there will be short-term pain, in the long run, they could emerge stronger with more trade partners and greater economic independence. If their new strategies succeed, they could set an example for other countries to follow, leading to a new era of multipolar trade alliances. For the United States, the outcome is more uncertain. If the White House manages to negotiate a favorable resolution, it may claim a political victory. But if the trade war drags on, the economic damage could outweigh any strategic gains. If American businesses continue to suffer from retaliatory tariffs, public opinion may turn against protectionist policies, forcing a shift in approach. One thing is clear, the global trade landscape is changing. Whether this shift benefits or harms the United States will depend on how it responds in the coming months. Will Germany and Canada force the U.S. to back down, or is this just the start of a larger economic realignment?